Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and doing some DD. So, this is another installment of AMC's Deep Due Diligence or Deep DD. And so, I'm just going to kind of continue on where I left off from last week, but I am going to go over some other bullet points and then maybe I'll come back to dilution and ape, which I spent most of last week on. And I'm going to try to limit this video to be just an hour long. And then, yeah, so I can kind of, maintain this process. And so there was a comment on dilution and ape really from last week's video, so I will go over that. And there was also a comment on the chairs and lasers, so I will also be going over that, but I'm not going to spend too much time on those topics because I really want to get into the debt and compensation. Those are two things that do stand out to me as being, kind of a bigger concern. And, then I'll get into the other points, in next week's episode. But I did want to point out this is the thumbnail to my 2-month AMC Theaters thesis. Here's a link to it. And there will be a link to this spreadsheet in the description of this video. So if you want to access any of this information, you should be able to have access to it. And since I did do a little bit of TA in this video, I will do a little bit of TA now, just to kind of give us an overview of where I see the stock price going. And I also wanted to note I will add a little bit to the dilution information there because we did get some news yesterday on January 16th. So I will add that to that tab as well. But first, I did want to go over the chart just to, give us a little bit of info there. And so, what happened over the past week is that price did come down, did break below this purple downtrend. And we did hit, $3.50. So if you are ready for it, hopefully that was a good level to be keeping in mind. And really, the big reason why I said, 350 is because I don't know exactly how low it's going to go, but my thesis is based on, not filling this gap down here at 291. So maybe we go down to 3, maybe we go down to 302, and maybe 302 is the bottom. Or maybe 305. I don't know if any of you live in Miami, but I used to. So 305, that's a fun number for me. Brings back some good memories. But yeah, we hit the low on, it looks like Wednesday, on the 15th, hitting a low of $3.21. And so, I, was not too surprised by that. And also that being on the 15th, that is associated with a new 8K filing that I will go over. But since then, we have gone up some. But there are some things that stand out to me about the chart that seem not majorly concerning, but just, don't be surprised if we do get a pullback. And so one of those things I did post on X, I believe on the 15th, that price was above, $3.56, which was the close, which was the high, on the 14th, top of that red candle there. I wanted to see a close above that level. That would be suggesting that there was a reversal. We did move higher than that, but we closed lower, put in this inside bar. As far as I understand what an inside bar is, that means that the candle, resides inside this bigger candle. So that's an inside bar. And so that wasn't necessarily putting in a reversal signal, but we were attempting to get there. Then on Thursday, we did close above 356, closing at 358, so looking pretty good there. But if we look at the shape of that candle, that pattern, it does look like it was a spinning top. So a pretty big wick to the top side, a pretty big wick to the downside. And so, a spinning top, it kind of means indecision because, buyers couldn't hold the price up higher. Sellers, were sellers, were preventing the price from going higher, whereas buyers were preventing the price from going lower. And I guess you could switch that. Sellers weren't able to push the price lower, buyers weren't able to push it higher. And so it's kind of like this indecision candle pattern. And with that, following this up move, that did suggest, that we might be seeing a reversal. But not so much. But then today on Friday, I am recording this in the last half an hour of trading just because I wanted to kind of straddle, the close, because I want to get out and go for a walk before the sun sets. But aside from that, we do have this big wick up, hitting a high today on Friday, January 17th of $3.77. And actually, it looks like we're going to be closing lower than we opened. We opened at a price of $3.62, and we're now around $3.50. And actually, before getting ready, or while getting ready to record this video, that alert did go off for me. We are currently above it, but I would not be surprised if we started to pull back, because we got this big wick to the top side, kind of an indecision signal here inside bar, not really being able to put a strong close above the high from the 14th. And really, if we're looking back to the 13th, that was Monday, the high on that day was $3.76. We were able to wick above that level by 1 penny on Friday the 17th, but we couldn't hold it, closing lower than we opened. We have not yet, but it's quite possible we put in a bearish engulfing candle. I didn't necessarily want to say bearish because it wouldn't be, much lower than the open from the 16th, which was at a price of $3.51. So if we close today below $3.51, and I will come back to the chart after it closes at the end of the video, just so we can get a look at that. Maybe it's a bearish engulfing candle. But really, what I see with the chart here, I'm just going to bring up my little drawing tool here. What I see, maybe we put the top in, but I do see that if price does continue up next week, just to note too that Monday the markets will be closed for Martin Luther King Day. If we do continue up on Tuesday, we might be getting rejected right around 380 is what it looks like. And then pulling back down. And so maybe we come back to 321. Man, that's an ugly arrow. But let's see if I can just put a little head to that arrow like that. Nope. Oh well, you guys get the idea. And I might actually, let's see if I can adjust this to be a little bit thicker. It'd be nice to have a little arrowhead on the end of that, but it is what it is. This is what I could see happening with the price. And as you might notice, I don't have that going lower than 321, because what I personally would really like to see is us putting in higher lows at this point. So, I'm thinking like 325, that would be a good bottom. But if we don't get to 325, or I should say if we go past 325, if we break below 321, that's not such a good look. We want to be putting in higher lows. And so, I kind of view this as, 325 might be a good dip buying level, but 321, if that gets hit, we're probably going lower. And then so I would then look for, 305, a fun level, good memories, Miami. I like it. So, that's, kind of my thesis, kind of revised. And one thing you might have noticed, this line popping up. This is something that, maybe I could see happening, but really I just see that purple downtrend acting as resistance. And so if I do come back, so I am over this, where is that line? Let's see, popping up there. If I do zoom out and let's see, get the axis to be adjusted there, we can see where this is going. And I'm just going to move that up. So we could see, yeah, potentially, we get up to like 685, fill that gap, and then come back to find this orange trend line as support. And if that were to be the case, we would have a 100% move, or, an extension. So basically this distance from the low here to that gap. So going from that distance, looks like I've had some covered call options close. That's what those little alert things were that popped up, just because, it's Friday. So Can't be making a little bit of money on the shares that I hold. No big deal. Anyways, let's see. This measurement would be going from, this point here up to that level. It's the same distance as from here to here, going from here to here. And that would put price right around $9 a share. I think it could be going higher than that. But really, I don't think this is going to play out as I have drawn it there, just because of this purple downtrend. We have been residing below it over here. Then we broke above and we're hanging out above it, right along it. We broke below and now it is resistance. So, I don't think that looks, excuse me, too great. And so I am going to be looking for 325 next week. And if we do break that, 305 would be my next level. And then if we do get down to 291, then that would kind of invalidate my thesis. But generally, that is an update. And so I did mention January 15th. Why is that a significant date? And really, that's significant between, let's see, the highs over here, or really, I guess I should say the close from the 5th, or maybe I'm going to do it from the close from the 5th, because I think that was, before the news of dilution, and then the low on the 15th. So price came down about 38% to that low. And on the 15th, if we go over to the AMC investor relations website, we can click on the, SEC filings. And from the 16th, we can see that an 8K was filed. So let's take a look at that. And so we have that here. I'm just going to zoom in on it a little bit so we can read it a little bit better. And so I just wanted to highlight a few things on this, and I will include a link to it in the spreadsheet so you guys can access it if you'd like to read over. And so really this is just saying, as previously disclosed on December 6th, they announced that there would be a dilution of up to 50 million shares of the company's Class A common stock. And then as of January 15th, all 50 million shares subject to the sales and registration agreement have been sold in such at the market offering. So it is good that that is behind us. And actually, I have to say, whenever this kind of announcement would be done in the past, I wouldn't look up the 8K filings. And, I had kind of forgotten this time around that when it's announced, you wait for the announcement that the sale has been complete. And that tends to kind of mark a bottom. I had really, forgotten about that, but that's what this document is. It, marks that bottom. Potentially, but we might also be going lower. And so just on the dilution tab, I wanted to, add to this, what do I have? Okay, so, why didn't I put the date all the way on the left over there? But what I can do, I'm actually just going to insert a row there. I don't know if I can paste the link for the dilution here. Let's see if I can do that. Yep, so I got that 8K filing. So I will write this as 8K filing sale complete. Or I'll do share sale complete. Sale complete, so we know what's going on there. And then I am, of course, going to adjust the font to Dreaming Out Loud Pro just because I find it to be a fun font. And so let's see, this date was January 16th of 2025. And the closing price from yesterday, let's go back to the chart. We can see that the closing price was $3.58. So $3.58. I'm not going to get into all these other details because, with market cap and all that, because I don't necessarily think it's important. But, you can access, let's see, I'm just going to scroll this above Ed's head. You can access that 8K filing from this spreadsheet or by going directly to the AMC investor relations website, which is just investor.amctheaters.com. And so, yeah, I think it's good that that's behind us, but unfortunately, price came down a lot. And with the 50 million shares, I mean, I just kind of view this as I think AMC shares are worth more than $5 a share. The announcement was made, over here on the 6th, when the high for the day was $4.88. And I imagine that there was just kind of systematic selling of those 50 million shares coming down here. Then they took a little bit of a pause, consolidating along that purple downtrend. And then they just continued to sell before we found this bottom on the 15th. So, I just view it as, if we're going to be diluting, we should be diluting above $10 a share, not at $5 a share. And I do think that we lost some momentum here. So I don't really like that too much, but it is what it is. So yeah, I mean, let's come back to the spreadsheet here. And so there was a comment on Dilution and Ape that kind of makes fun of me. Also, it might be viewed as a little bit harsh. So brace yourselves for it. But I just kind of wanted to share the comment because I think it's good to just be keeping in mind. So I'm just going to read this, and I'll just go over a little bit so we can read that together. Okay, and it is above Ed's head, so I'll have to keep that in mind. And actually, wait, no, I can just do that so then we can read it all more easily there. Cool. Okay, so this person commented, and I have to say thank you for watching the extent or a lot of last week's video. It was 4 hours and 15 minutes. Pretty crazy. But, hopefully you guys got some value in that and just kind of appreciating how kind of complicated the raising of funds has been for AMC, especially with the Ape shares. But anyways, I'll just read this comment to us. And so this person was saying, it was painful to watch you try and make heads of tails out of what Adam Aron has done to our share price. And so I watched halfway through and could see you were confused because you were mixing pre-split and post-split numbers, and they give you bad data. And so, yeah, I mean, that's trying to compile a lot of data here. I don't typically look at this kind of information, so it's a lot to digest. And, I'm just trying to make sense of it. It's tough to make sense of it, in all honesty. And so this person continues on. The original float pre-split was approximately 517 million shares, and that original float was reduced to 51 million after the split. And so I would think that actually be like 51.7 million shares. So don't forget about that 700,000. But yeah, that does make sense as far as just the basics go, because it was a 1-for-10 reverse split. And so that was done. So 5 billion Ape shares. I didn't recall there being that many. But, that is something I will look back into in later videos. I just don't want to dive into, the weeds of, the apes and all of that. It's just a lot of info. And so that was done. So 5 billion Ape shares, just a lot of Ape shares, could be injected into the float. So yeah, that was a massive dilution on top of the reverse split, on top of actual, capital being raised, a dilution. It was just like, a triple whammy, just three things happening that really just, it's like they squeezed the value out of our valued share price. So that was kind of a pretty bad hit for all of us. And then, so he continues on. If you simply multiply your current float by 10, you will see how many shares are actually in the float and compare apples to apples, so to speak. Yes, I'm aware that because it was a 1-for-10 reverse split, that I could be doing that. And so that, again, is something I will explore more in a later video once I've covered kind of the other bullet points. And so if you multiply the current issued shares by 10, you get 3.7 billion. Multiply the current authorized shares of 550 million by 10 gives you 5.5 billion shares now authorized compared to the original 517 million pre-split float. So yeah, we got totally diluted to oblivion. So, not so great. And, the math here, I would like to double check it and stuff, consulting comments on YouTube, maybe not the best resource, but this person did put a lot of thought into this. So I do think that this does make sense. I think it's good to, when reading things from online from people in the comments, did they do their homework? This guy seems like he has done his homework. He or she, I should say. I don't know who they are exactly. And I am removing the usernames or the handles from these posts just because maybe some people get pissed off about them, and I just don't want to be throwing anybody under the bus. But I do appreciate the comments. And so this person continues on. The reverse split and APE injection absolutely killed AMC pre-split investors. I feel like we can all agree with that because we've really just been decimated since that happened, 2.5 years or 1.5 years ago on August 2023. And so originally retail owned 90% of the float. After the split, retail owned 9% of the float. That's how badly Adam Aaron effed us. And, that's his opinion, or this person's opinion. And at the same time, he was telling us the split was good for us. And, the proof is in the pudding, as they say, or maybe the proof is in the popcorn for us that, it wasn't good for us. So I think this is not, some conspiracy theory or anything, just the evidence in how the stock price has declined. It hasn't been good for us. And I think that you can say, but, we just get more shares for cheaper. Sure. But, the idea is for this investment to, yield profits. And if it's just bleeding for 4 years, but that's not why I'm here. I want number go up, not number bleed down. And anyways, he ends this with something that may piss a lot of us off. I think, names are funny. It's good to be clever. And this person was pretty clever with the silver backstabber. So I appreciate that cleverness. I don't necessarily agree, but I can see where this person's coming from. I do appreciate it. So I did want to share that. And with this note, I think that, kind of compensation is one thing I want to get into with this video. And so I will look into that before, getting back into the dilution here. But I did mention coming back to this list that somebody did mention the chairs and lasers in the comments. So I did want to go over their comment over here. And so this person says, in my honest opinion, most focus too much on the stock price and not enough on the company. And so, if you're invested in a company, you want to be paying attention to, of course, the company, but also, the stock price. You're invested in it. That affects your, net worth. So I think it's good to be paying attention to it. AA said in his latest call that the new cinemas with the laser projectors and comfy seats rake in much more profit while also being cheaper to maintain. So those are two things that, I think are great about them. So let's see. They're comfy. I think that's great. We want to bring people in and we want them to be comfortable while also being cheaper to maintain. I think that's good as well. But, kind of my concern or my critique of especially the chairs, somewhat the lasers, is the laser projectors, I should say, is that, if you just think about an airline, what have they been doing over the years? They've been figuring out ways to make the seats smaller, more compact, so they can cram more people into those tin cans. And so if we have an airline, let's say, and we're making the seats bigger, more comfortable, sure, we can charge people more money for them. But, it's like the first class or the business class seating. You got that section up front with the really nice chairs, kind of the little home theater systems built into them. Very, very nice. But not everybody on the planes is sitting in those seats. We just got, kind of a VIP section. And so I feel like, we could be doing something like that with the theaters. Maybe that's what the plan is. That's something I need to look into more. But I just kind of view it as if we're making all of the chairs in the theaters larger, that would be making all of the chairs larger in a plane. You're going to be able to fit fewer people into that plane, and you're just going to make less money as a result. And so, while it does make sense that, if we're getting fewer people going into the theaters, whether that's because of streaming, whether that's because of, social media, all these distractions that we have at our fingertips, if we're getting fewer people into the theaters, we want to make sure that the fewer people that are getting there are having a better experience. So the chairs make sense. That's good. And the laser projectors make sense. That's good. But if because fewer people are going to the theaters, we're not able to balance or compensate for that, I feel like that's not really a winning strategy because, we're putting a lot of money in to not make much back. So that's a little bit of a concern to me. He did say that it was his goal to modernize as many screens as possible to benefit from the from the added revenue during the next year's box office. So, I think that's great. Modernize the screen so we get more people going into the theaters. But, if we're thinking about like the TikTok or the Snapchat generation, I personally don't use either of those apps, maybe because I'm a little bit old, maybe just because, I prefer X and YouTube, or text messaging really. I view that kind of generation as not necessarily being the generation who likes going to movie theaters necessarily. I'm a millennial. I grew up with that, have a lot of great memories with that. If I had kids, I'd want to be bringing them to the movies. But, those kids then grow up and they may not want to be doing this. So I do think it's just, maybe it's just a generational thing and we're kind of phasing away from movie theaters. I think there will be a resurgence, but, we just have so many different ways to be entertained, ways to connect socially. And, people may just not be, getting back to the theaters as much as they used to. And, that kind of makes sense. So, maybe this is a good way to be maximizing the quality of the experience for the fewer number of people that go to the theaters while also being able to charge them, a higher ticket price. So I think that's good. But if we're not making enough, that does make me a little bit concerned. And then so this person continues on. If you want to talk about what the stock price would be without dilution, you also have to include how much money AMC will miss out if they don't switch to laser projection now. So yeah, it's you can't have it both ways. You can't run a simulation of if we do it this way, if we do it that way, and then take the best output. We just have to kind of go with the path that we're on and see how it works. So yeah, this is the path we're going on. So I hope it works well. And then this person closes with, but a lot of the argument seems to be, I don't want to sell. I just don't want to see green to feel comfortable. I just want to see green to feel comfortable, which is a false mindset to have. Anybody, whoever's listening to me talking right now, have whatever mindset you want to have. If you want to sell, sell. It doesn't matter. If you don't want to sell, don't sell. If you want a diamond hand, don't sell. Hold for the rest of your life. I think any of us, I want to see green. Anybody, any stock that one holds, want to see green. You want to see that that's a good investment. So far, AMC is not a good investment. If you're caught between a rock and a hard place where you don't want to sell, but you can't handle it being red anymore, then, kind of the reason why I'm doing these DD videos now is because my thesis is that we will be moving up higher. And so now I think is the time to plan for if it is dipping to, let's say, $3 a share, get that average down. And then when it does go higher, trim. You do whatever you want to do. But I think having the mindset of, I don't want to sell, having that mindset, I feel like is actually really bad for the performance of the stock because, if hedge funds, those shorting AMC, whatever, know that there's a community of apes that are just going to be buying whatever the stock price is, they can just manipulate the hell out of the stock price because they know there's always going to be buyers. But if we look for technical levels like 350, which is kind of arbitrary, 325, putting in a higher low. I'm just going to go back over to the chart. 325 would be putting in a higher low. So that would be good. That's a technical level. But then if we break 321, we shouldn't be buying at 321 because we're going to be hitting new lows. And I think that, with that being said, if we're going to be hitting new lows, then 305 is a good level. And then so rather than just like diluting buys from, 350, I think that's effectively what we closed at today, diluting those buy orders from 350 down to 305, that's just spreading it out, and there's no punch, there's no trigger to really launch this higher. And so I feel like if we are to be coming down below 325 and break below 321, then yeah, I think 305 is a good level just because I like Miami. But I think that that's also, above this gap. And I feel like that's just, people are waiting for that to get filled. And if that doesn't get filled, they get left behind. So I feel like that, is a really important level. 305, let's punch it rather than just, let it fade down as our buying power gets exhausted. So yeah, have a strategy with that. And as it does go higher, you may or may not agree. But I don't think it's going to like $1,000 a share. I think we'd be lucky if it went up to 50. And if it did go that high, I think it'd be pulling back just like we saw over here. And so kind of going over my thesis, I feel like we'll be lucky if it gets up to 20. I think that would be good. And I think that we would be lucky if it pulled back to around 12 down to 10. That served as the consolidation range before the next move up, maybe a year later. So, with that being said, I've spent about half an hour going over this other stuff. And so I kind of wanted to get into, let's see, over here, I kind of wanted to get into the compensation. And this kind of builds upon the person's comment about, the silver backstabber. I don't necessarily agree with that. I just think it's funny. But I feel like, there's a compelling comparison in some ways between AMC and GameStop. And with that, I think that you have to also factor in the differences. And one of the differences, compare and contrast, one of the differences is that as far as I understand, I know Ryan Cohen, I think the board of GameStop does not take compensation. They are invested in the company and they are rewarded. They are compensated by the share price going up. Whereas Adam Aron also is compensated if the share price goes up, but he gets $1 million+ salary. So, I don't know about you guys, but I'm not making that much money. I'm definitely not making money holding the stock if it's bleeding down. He is. So I think that's something of concern. So I am just going to add the tab here for compensation. Compensation, if I can spell that correctly. And I'm just going to see how I have these other tabs formatted. This is, let's see, to 260. So I'm just going to go to here, type that 260. So it's a little bit easier for us to read. And then I'm going to select all and change that font so we can look at that. And so let's see, I'm just going to, okay, cool. So compensation. And so let's see. I think, kind of a quick way to do this, we could do, the SEC filings. Maybe we want to go to the quarterly reports. Why can't I? Okay. Go to here and let's see. The most recent quarterly report was, from November 6th. So I'm going to look at that and see about compensation. And this is an SEC filing, actually. Let's see if there's any compensation. Non-cash portion of stock-based compensation. So that is, the shares. And let's just search that stock-based compensation. Lots of compensation here. Let's see. Maybe I want to look up salary. Maybe I'll go look up salary. Salary. Oops. Nope. Okay, so that's not there. And so I might go back to, well, let's see. I don't necessarily need to do the SEC filings for quarterly reports. What I kind of want to get to is, I believe, news and events. So let's go over there. And so this is from the 16th, December. So I think like November 6th, was it? This is the Go Plan movie going experience. So I think that's kind of like along the lines of the of this stuff. So let's see. Okay, so maybe I want to copy these links and put them in. Actually, no, I was thinking, I'll copy the link and I'll put this into, this is the Go Plan. So I'll put this under the chairs and lasers. And so I'll just type Go Plan, and I will make this a hyperlink to that page. And so that was from, let's see, what date was that? That was November 7th of 24. And then we also have, I'm just going to take a step back. Let's see, the XL at AMC. So we'll also include that. So let's see, XL, and I will make that a hyperlink as well. And that was also from this date. And then I will, let's see. Okay, so November. Okay, yep. So November 6th, Holdings reports third quarter results. So this is one that I want to look at. I don't know necessarily that I will include, we got the webcast here. I stream that. And I'm actually just going to, hopefully I can view it. Yeah, the PDF here. And so we can kind of read through some of this together. And let's see. Compensation. Stock-based compensation. So I don't really want that. So what I want is to know okay, so I'm just going to turn to Google for this, I guess. So Adam Aaron compensation. Okay. So, yeah, I mean, this is something that I think is pretty important to consider. It's not millions, tens of millions. So this AMC Theater CEO Adam Aarons received compensation of $25.4 million in 2023, up from $23.7 million. And let's see. I just want to kind of see, are there any sources here that are coming from AMC? So okay, so let's see, show this. Okay, breakdown of Adam Aarons. Okay, so in 2023, so this is not 2024, which just ended, so maybe this will be updated. But in 2023, Adam Aaron, the CEO of AMC Entertainment Holdings, received $25.4 million in compensation. This was a 7.2% increase from 2022. And so the breakdown of Adam Aaron's 2023 compensation. So the base salary was $1.5 million. Okay, that was more in line with what I was thinking. And so, I mean, just think about, personally, I don't make more than $1 million a year. I don't make close to $1 million a year. And, also I'm not a CEO of a company, so that's fine. But, I do put money into AMC. And so, just trying to think about, the math of how many me's it would take to compensate him for that. That takes, depending on how many shares you have, that takes a lot of. Actually, we can do this. We can do this math. So 1.5 million. I'm going to pull up the calculator. And let's see. 1.5 million. So 1.5 million. So there's 1 point, and then this is the million, another comma there. Okay, so that is his base salary compensation. Okay, and then let's divide that by the share price, which we'll just say it's 350. So divide this by 350. How many shares is that? That is 429,000 shares. That's a lot of shares. Okay, and let's say the average AMC shareholder, I should say, holds 10,000 shares. So if I divide this number now by 10,000, being kind of an arbitrary number, how many shareholders? That's 42 shareholders. You're just putting money in, 42. So let's say 1/40th of that would be like one retail shareholder. The entire amount of what's invested is going directly to the CEO's salary, base salary of 1.5 million. And so the stock awards makes up for that to get up to 25.4, being about 18 million, and then non-equity incentive plan compensation, which I don't really understand that. So what is this? We'll have to dive into that a little bit more. But yeah, I mean, I feel like that's probably coming from shareholders. So that's, just a lot of money coming from shareholders. And so I mean, this just maybe I just seem very negative about this, but my view would be wait for once AMC becomes profitable, once the debt is paid, then take a salary. Because CEO should be incentivized to increase the value of the company, increase that share price, and that would be, compensation. And so 1.5 million, I mean, what is, I feel like 200,000 would be pretty reasonable. 500,000 would be, I think, excessive, but more reasonable. This is 3 times that for a base salary. That's extra money, and then also getting the shares. It doesn't matter if the shares go down, a substantial amount. And so, because he's still making, millions of dollars over the past 4 years. So, yeah, I don't know. And then non-equity incentive plan. So I'll have to look into that. Let's see. Okay. And so comparison to previous years, received, this much in compensation, 24 million, 19 million. And so, 19 million in compensation, 2021, that was, like a big year for the stock, but, that we topped and stuff then. So anyways, shareholder votes in 2021, shareholders voted against Adam Aron's compensation. I think that's a good thing. I think that we should be voting against that until we're out of debt or until we have a clear plan. Let's say we have $4 billion in debt, I believe, somewhere around there. Once we have that consolidated and we don't just have a plan for 4 years to be out of debt, but that, we've paid 3/4 of that off, then reward that, paying off that debt. But right now, no. I mean, so I think it's good. Shareholders voted against Adam Aron's compensation and that of other executives. I think it's good. We need to hold them accountable while the stock price is lower. And that's not to say that he's the enemy or that other board members are the enemy. That is just to say that the company needs to be doing well first in order for people to be getting paid millions of dollars. And so, I can click on this. So this is shareholders vote against Adam Aron's 23.7. I think that we should be voting against any compensation increases until we are out of debt or at least 3/4 of the way there. And so let's see, what was the equity incentive? So I wish I could just like follow up on this like I can with Grok. And so what was the non-equity? Received $6 million in non-equity incentive plan compensation. This was the same amount received in 2022 and 2021. And so, okay, so this is, yeah, so Market Watch, I don't know, Hollywood Reporter, which do I want to go to? I'll go to this one because it's more recent. I've got a, okay, so what's, yeah, I just want to know about that 6 million. What's that 6 million from? I cannot sell anytime soon. So, yeah, I mean, that's, I don't know, that was a while ago, I'd imagine. But yeah, I want to know about that 6 million. Oh, Adam Aron's non-equity incentive plan compensation was 6 million. So I just want to know what that is. What is a non-equity incentive plan compensation? And so let's see. What is non-equity incentive plan compensation? Non-equity incentive compensation means any variable cash compensation that is issued under any company plan or agreement and that is granted, earned, or vested based wholly or partly on publicly reported financial information related to the company or one or more of its subsidiaries. And so let's click on this maybe just to get a little bit better understanding of it. And so, yeah, some examples of non-equity incentive compensation in a sentence. It is understood that any non-equity incentive compensation to be awarded to the executive may be based on the attainment by the employer of certain performance goals established by the board of directors in consultation with the executive relating to factors including but not limited to asset quality, profitability, and growth. Okay, so future non-equity incentive compensation will be determined by the Personnel and Compensation Committee or the Board of Directors in their discretion. It is understood that any non-equity incentive compensation to be awarded to the executive may be based on the attainment by the bank or its affiliates of certain performance goals established by the board of directors in consultation with the executive relating to factors including but not limited to asset quality, profitability, and growth. So given that he had received these in the past, I would imagine that he was receiving them. So, you know, that coming back to let's see, where was I? I was looking up caves for stalagmites for making the thumbnail for this thing. So yeah, I'm just going to go back to here and scroll up. And so let's see. 6 million, and so that's the amount that was received in 2022, 2021. So he's racking up millions and millions of dollars. As you know, of course, we got big moves in 2021, but since then it's just bled. And so I don't really think that, you know, it's worthy of giving out millions of dollars. And, you know, with that being said, this is really just Google searches. So, you know, maybe I'll just include, you know, links here just so there are some resources in the table here. So I'm just, yeah, I mean, this is going to be kind of rough, and then I will make that a hyperlink so you can see that there. And then also, you know, Hollywood Reporter. Let's see, copy that, and I will paste that as well, make that a hyperlink. So we have that there. And yeah, I mean, just Google, you know, Adam Aron compensation, whatever, if you want to. And so, yeah, that I just kind of wanted to highlight that regardless of the performance of the stock, the CEO is making millions of dollars, which I think, you know, is fine. But the company is in a lot of debt, and that raises some concerns for me. And so I'm just going to backtrack. So it says Adam Aaron compensation. And then I'm just going to type in Ryan Cohen GameStop compensation. And so Ryan Cohen, the CEO of GameStop, receives no salary. And their company is completely transforming. So I just wanted to point that out. Because, yeah, I think that is good leadership. That the leadership should come from a place of we're going to create value, and the value reflected in share price will be going higher. And we're seeing that with GameStop, although not necessarily over the past week. But GameStop has outperformed AMC without question over the past year. So I think that that's a better example. And so I think that for future votes, I think that anyone on the board, CEO, CFO, anything like that, they should not be getting paid more until we're closer to being out of debt. And so that's another point that I did want to cover, which I'm probably just going to get into scratch the surface of it, because it's, I got about 9 minutes left if I'm to keep this to about an hour. And so, yeah, but I just didn't want to go over some debt. So I'm just going to create the tab here for debt. And this is really inspired by, a post that I saw on X. So I'll try to search for that. And I'm just going to try to make this my favorite font just because it's fun. And so, yeah, so let's go over to this. I like Grok. This is, I was searching this for making the thumbnail. And so let's see. Let's see. How do I want to do this? I had previously looked at a post in which someone was discussing AMC's debt and progress that's been made on it on a quarterly basis. The tweet included a screenshot of a data table, I believe. Can you find that post? I'm not going to say tweet. I don't want to offend Grok. Can you find that post or posts? Could you find that post for me? And so let's see if Grok can search that for me, because that's kind of the basis of what I wanted to go to. I can search for posts on X that discuss AMC's debt and progress on a quarterly basis, but I couldn't find any specific post with a screenshot of a data table from available results. However, there are several posts from X that talk about AMC's debt reduction. So posts on X have mentioned AMC reducing its debt by significant amounts in recent quarters, with one user noting a reduction of $434 million in quarter 2 of 2024 and another $130 million in quarter 3 of 2024. Another user reported that AMC had 10 consecutive quarters of debt reduction, so that might be the one I want to look at, with the reductions increasing over time. There's also mention of AMC's long-term debt being reduced from $10.8 billion in December of 2020 to $8.8 billion, with further reductions in the last 30 days of that post. If this specific post with the screenshot you're looking for isn't among these, it might not be available in the data I can currently access. Okay, so I think actually let's look at these 5 posts. This is the one that I was looking at, but I'm just going to kind of read these, and I wish I could just make these. Okay, so I'm just going to go through them, one at a time, and these are people I don't think I follow, and I'm not trying to throw them under the bus or anything or say that they're thinking poorly. I just kind of wanted to go over what people's thoughts were, and then that table, the screenshot for the other one, I specifically wanted to go over that. I might populate some of that into my spreadsheet and and then that would be available for you guys. And so rough numbers, since December of 2020, AMC's long-term debt has been reduced from 10.8 billion to 8.8 billion. And this is all, assuming this is correct. Of that amount, 4 billion is lease liabilities, which accounting rules require to be counted as debt. So really, it's like 4.8 billion of actual debt remains. And so another 150 million has been paid in the last. So anyways, this is not the post I wanted to get to. So I'm not going to spend any more time reading that just because time is short. And so the one that I did want to look at, which I might actually, populate the spreadsheet that we have with this, and then maybe I can kind of like fact check it later or check it with what we're seeing from our reports, annual reports, quarterly reports, whatever. And so, Joel, I'm going to like this just because, I should have liked it before. And so AMC 10 consecutive quarters of debt reduction, and the reductions are getting bigger. However, I would not necessarily agree with that. Because of numbers. How long before we make dollars every quarter, even in below average box office quarters? I'd say about 4 years. And so remember, our revenues are trending up. Debt is trending down. DFV is now. I would disagree. I would say that once debt is mostly paid off, then maybe we'd be getting to DFE territory, but not right now, unfortunately. You do you, I'm averaging in. So of course, everybody, you do you. And so I'm just going to, let's see, I'm actually going to, let's see, I'm going to see if I can open this in a new tab and highlight this as data. I can't. So what I'm going to do is I'm going to save image, and I'm going to save it, just to this. All right, and I'm going to open that image now so I can copy and paste the information. It's not opening. Okay, got it open. All right, so we got that here, and so now I can just do, a handy dandy copy and paste of this information and put it into our handy dandy little spreadsheet. And so this is the table. So I want to do it like this. There we go. And and so I should note that, let's see, insert. This is from, where is this from? This is from this tweet. And so I'm just going to copy the link, and I will paste that here. So if you guys want to access it, you can. And I'll make that on there. Okay, and so just making sure I've got this formatted correctly. This should actually be over here. Man, I don't get what's going on. Why is this USD? Oh, it's because it's wrapped text. Okay, so quarter ending, long-term debt. Okay, so that's why it did not copy it correctly. So quarter ending, and then long-term debt in billions of USD. So this is USD. So it didn't copy perfectly, and that might actually be, can I merge and center those? There we go. Okay. Dang it. So what I might do, just to try and, why is this? So I'm going to just copy that text. No, I don't, dang it. I don't want that. All right, so, and I am going over an hour for this. I think it's important just to have this data here, I don't want to insert cells. And so quarter ending, I'll copy that there. Long-term debt in billions, copy that there. Change quarter. There we go. And so I can delete these. And I might actually move all these cells over so it doesn't interfere with that URL. And okay, so actually I got all these windows open, and so I might, let's see, wrap the text here. And what the hell? And I'll do it like that. Okay, so that looks kind of nice. There's just TMI on this one, you know, it's a lot of information. Okay, so I think that looks kind of nice how it's organized. And so let's just think about this. You know, in his post, he's saying 10 consecutive quarters of debt reduction, and the reductions are getting bigger. That's not true. Right there, that's not true. It went down by half. So good to do math. And so, you know, we got long-term debt of $4 billion. And so let's just kind of project this out into the future. And let's see. Yeah, so I'm just going to insert some cells. Actually, here, I'll do some math. Let's say, what's the average change? Average, oops, of debt reduction per quarter. Okay, that's, you know, 114 million. So that's, I think, okay, so this is the average. I'll just write that average. Or maybe I should say mean. Let's do this one as the, I don't know, let's say max. Okay, and so max, this is going to be easy to calculate, but I'm just going to type it here. Max, and we've got that there. And, oh, wait, no, I want to do min, you know. So I should say, really, I mean, that's the maximum debt reduction, maximum reduction. And so I will want to actually change this to the min. And so that is, you know, of course, this one here, it's very easy to see. And so let's kind of work out a couple scenarios. Let's see, how do I want to do this? Yeah, I mean, because really we can have two scenarios where we pay off the mean every quarter, and we can do another scenario where we pay off the max. And so let's think about that. And this actually gets into this idea of the timeline. So let's just think about that. And so so let's see, 4 quarters here. So I'm going to insert those. I want them to be formatted same as below. Okay, and then so here, I'm going to do format. So that's 1 year, 2 years, 3 years, 4 years, 5 years. You can see where I'm going with this. Okay, and then so this will then be, you know, let's see. How do I want to do this? Let's see. This is 12, 31, 24. Then we've got 3, 31, 25. Then we've got June, so that's 6, 30, 25. Then September, 9, 30, 25. Then we've got, I don't know if I can, will it recognize the pattern if I go up? Yes, sick. Okay, so There we go. That is populated. And now, yeah, I mean, we've got two kind of hypothetical scenarios. And so I kind of want to capture that. And I'm going to freeze the windows up here. So Windows, freeze panes. So we got that header there. So that's good. And so, yeah, we got two of these situations. So these are, the real ones. And then I will insert, I don't know exactly how I want to do this, but we're just going to go with it. Insert a couple columns there. Format same as right. Okay. And so this is debt in billions. And this is change, so the delta. And this is in millions. Okay, and so this is going to be based on the mean. This one will be based on the mean. And then I will copy these. And I will insert them here. And these will be based on the max. Max, okay. And so from that, let's just kind of, gather the senses or whatever. Make sure these, we can read all of these. And, okay, so mean. And so, okay, so let's see, the debt by the mean. Oh, and actually, I don't really need to include the change because we know it's going to be the mean. So I'm just going to delete this because we don't need it. And then I'm going to delete this because we don't need it. And so what I'm going to do is I'm just going to copy these and put them over here. Okay. And then from that, we're just going to say, the cell below, and then plus this change. And that's going to be divided by 1,000 because we're dealing with 1 million versus 1 billion, okay? And then I'm going to do Command T to lock this cell so that doesn't change. And so we do have a reduction there. And I should note that this mean is in millions. And this max reduction is in millions. Okay. And so now I'm going to do the same thing. I'm just going to copy this, paste it right here. Should be the same number, but we don't want the mean. We want the max. And so I'm just going to move that to over there. H23, that looks good. And then this cell I want again to be over here. So it's the one that's just below. So, and then we can drag these up. And let's see how long it will take us to be paying off debt, considering either the mean payments or the maximum payments. Okay, so with the maximum, we would be debt-free by, March of 2028. If we do the mean, we won't even be debt-free. So yeah, I mean, what I'm going to do, I'm going to continue this until we are debt-free. But look, I mean, it's like that much time based on the mean, and we're like half the amount of debt. And so that's just going to be more dilution, more share price going down in my view. So, because this is going back to like, when it was at highs. And so let's just insert some rows formatted like the ones below. And I'm just gonna, unfortunately, okay, so insert, insert, insert. So I'll do another 4 years. And then let's just drag this higher. Okay, so getting up to there. And so let's hope that's, you know, that is, you know, we don't go that far into the future. But let's see. Okay, I'm just going to keep dragging this up. Okay, wow. I nailed it. That's pretty cool. And so that is going to be 33. 2033. So we'll have possibly sent a starship to Mars before this goes, AMC is debt free. We will possibly have hit 1 million per Bitcoin by, you know, this time. So I just think that this is an important thing to consider, that if the past 4 years were tough, if the past 3 or 2 years or whatever it is, if that was tough, you know, sure, I think that there will be volatility. I think there could be some squeezes, some big moves to the upside. I also think that there could be more bleeding, more dilution, more reverse splits, and stuff like that. And so really, like, the best case scenario in paying off this debt, assuming this is good data, then, you know, AMC is going to be in debt for another 3 years. So keep that in mind. I think that's a really important point. It might take 3 more years for this to be maybe a DFV play that has a really solid foundation. Right now we don't. And so I just think that's something really important to consider. And maybe I'll try to make some plots with this information. And so let's see. Maybe I'll just hide this for, actually, no, I can, let's see. Okay, so I've got this column here going back in time. Then I also have this column here and this column here. And so now let's make a plot. I'm not the best at making plots, but we got this little scatter plot, and I want to make one like this. So let's see what this looks like. Okay, yeah, so actually, maybe I'll put this here. Let's do that like that. And actually, that's kind of an ugly chart with all those dots. There are just too many of them. So I am just going to do this again. And then I will do dark, dark. There we go. It's a little more streamlined than my clunky way of doing it before. And then I am just going to go up to insert, scatter plot, and we don't need all of the points. And so maybe I should say mean reduction, mean quarterly reduction, and this one will say max quarterly reduction. Yeah, so, I mean, what's the time horizon? You know, this is, and maybe I want to, Yeah. I'm actually gonna, I'm sorry. I'm gonna delete this. I know you guys were attached to it. Okay, so I'm gonna go these two, and then I will also go, don't go. All right, I hope you like my sound effects. And so, the reason why I want to include the other one is because I want the data. I want the data to be included. So I'll just do the same type of thing. And okay, I think I need to, one more try. Okay, so I'm going to do this one first, then I'll do these, then I'm going to do this one. And let's see if that looks better. And so insert data. Dang it, man. Maybe what I should do is just, okay, so I'm going to cut this, paste it here, and then since I'm looking at this, I may actually want to just go with the data that I have here, and then I don't want to include that previous data, okay? Well, why did that happen? Okay. So I've got that, and then I want to get this other side to be, man. No, crap. I'm screwing this up totally. So, okay, I got it there. So that's good. Then I want to get this to be up to here. And this to match that. Okay, and then I don't know why that's, I'm gonna try this one more time. Okay. And what I think I need to do is I don't need any of this data other than this point. And so what I can do for these, yeah, I'm going to just move this over to here. So, it's like basically, it's like I've created a model here based on this number, and then I can just clear these out. So clear contents. Okay. So now we then should be able to see all of it. Okay, so let's go from here to here. And then all right, and now I can scroll up to the top. Insert, go into here. Okay, yeah, so that is kind of nice because, we have the data and actually, no. let's see. Yeah, so I'm going to put this right here. I'm just going to adjust one thing though. I do want to have this overlap, so I'm going to copy this and put it here and put it here, and then I can change these back to how they were before. And so that's fine. And the reason why I want to do that is just so we see, you know, this connection. And so, yeah, I probably spent way too much time on that than, you know, really what any of us needed. But what we can see is that with our max quarterly reduction and we get down to 0. Let's see. Man, I probably want to adjust this axis. So let's see. Format axis. I want it to be... It'd be nice to just make it by date. I'm not going to spend the time doing that. You guys get it. This one, at least on the data over there. Yeah, I mean, it's like this one holding to like 2028. This one holding to like the end of 2033. So I think that's something to be a little bit concerned about. That this is maybe it's steepening. Maybe I should add. Yeah, I mean, like, we got to figure out the goal. What's the goal? Anyways, this video is long enough, more than an hour, and so I'm going to end it. But I'm going to come back to the chart so we can end it over here. And yeah, it looks like we ended the day at $3.50. Let's take a look, though, quickly at what the max pain was for AMC. One thing, you know, I don't know if you guys pay attention to this. I do unusual whale stuff, like it a lot. This is just for the trading of today. That we see, you know, stock price in yellow came down, disappointing. But what we see is that the net put premium stayed more or less flat, right around 0. So nobody's buying a lot of puts, nobody's selling a lot of puts, kind of flat, but people are buying a lot of calls. So that's potentially good. It looks like the net put premium went down by about 9,000. So that suggests that people aren't really going too short with contracts. But net put premium went up by $616.55 thousand. And so that's over $500,000 going long on AMC with the options contracts. And we can see here that volume was positive, increased over the course of the day, and that's because people were buying up calls. So that's good. But also with stocks like AMC that are pretty, you know, heavily traded by retail, take it with a grain of salt. But anyways, that's not what I wanted to get into. I wanted to get into the ticker explorer, go to the Greeks behind Ed's head there, and I wanted to look up AMC so we could see what the max pain was for today. And it was unfortunately $4 a share. We closed the week 50 cents below that. So the bears unfortunately seem to be like they are in control. And let's look at what the max pain is for next week, which will change every single day that the market's open. But let's just take a look, $3.50. So hopefully we can hold at least where we are currently at. But like I said, it does seem like we are getting rejected below this purple downtrend. We might go up to it, but we might pull back. 325. I want to see that hold as a bottom, putting in higher lows. If we don't get to 325, I think that's great. If we break below 325, if we cross or even hit 321, that makes me think it's going lower. And then I would think $3.05 is a good dip buy because it's above $3. A lot of orders might be placed there. Just if AMC gets to $3 a share, I will load the boat. Market makers probably want to leave those people behind. So let's leave them behind. Some people probably see this gap here at 291. They might have some orders placed there to buy there. They might get left behind. So let's beat them to it. You do you. I'm just saying what makes sense to me. 305 if we break to 321. Hopefully we don't. Hopefully we hold 325. And if we don't even get to 325, I think that's great. I do think that right around here, it's around 385, maybe 380, might be some resistance with that purple downtrend. So keep that in mind. $4, of course, also going to be a psychological level. We did consolidate, a lot around $4. So that's going to be a tough level to be breaking above. So keep that in mind. But I do think that we could be seeing, above 685 later this year. I suspect above 9. And I would think that we'd be getting it back up to around $12 a share. Might be short-lived, though, but it may also be the new support if we go past to fill the gap here at around 20. So keep all of that in mind. I hope you all have wonderful weekends. I unfortunately have to be working. Oh, and one thing I did want to mention, I meant to mention at the beginning of the video, but let's see. I'm going to be doing Ticker Request Live. I usually do it on Sunday, but since we do have Martin Luther King Day on Monday, the market will be closed. I just put out this poll if people want me to do that on Monday instead. Let's see. Still, nobody's voted in it, so make sure you vote if you do like Ticker Request Live. But if you don't, that's cool too. I'm probably leaning towards doing it on Monday, but it doesn't really matter to me. I talk about Sunday all the time, so I'd feel bad not doing it then. But anyways, back to the chart. And if you did enjoy this, please make sure you like it. Make sure you subscribe. But as always, those are just my thoughts. And if you did find them helpful, make sure you like, make sure you subscribe, and I will see you in the next video. Have a great weekend, everybody. Take care.